Okay, Bruce here. Let's jump into one of the hardest funds to do at all because the concept is so new, and also it's not that popular, but I think they're going to become a lot more popular. So anyway, let's jump into Crash. I like Crash better. Sometimes I start calling it Crush as well, but I'll try and stick with Crash because it fits the bearish theme. So we closed down, which is what we want to happen with Tesla. It was down 1.57%, our underlying. And so therefore we gained 111. So with these kind of funds, if one goes up, the tracking goes up, we should go down, right? If it goes up slightly, we might also go up, which is what happens when you're long stock with synthetics and you're selling weeklies. In this case, you know, we're selling weeklies and 2-week puts, and then we're buying these protective calls. So we have calls and puts in play besides our synthetic. So that really makes it hard when you first do this. So I'll do my best to explain it. I've spent a lot of time cleaning this up, and I'll do my best for that. So what happened today other than this? So this was a positive day. So in terms of trades, they're finally starting to show these. They're still not really showing the details of the holdings. I had to just use some calculations to figure out that money flowed in, and I knew it was from shares, and I did the math, and I know they use creation unit, so I was able to tell that they added 25,000 shares. So hopefully the Yieldmax people that are posting this info stop playing games with us a little bit, because as a YouTuber out here, I'm supporting Yieldmax and the Yieldmax funds, and I like them. So if anybody has any contact or anything there, let them know that, you know, we're buying these funds. At least they can do. So instead of doing holdings, they just have an image out there. If you try and download the holdings file, you get PayPal data. PYPL, you don't get their fund, you don't get Crush, which is Tesla, but they do show the blue image, and from there I can sort of tell what the cash is and other things. And then finally today, on the intraday, they put their trades in, so that makes life easier. So what did they do today? Well, on their 719 synthetic, right? Unlike the bullish long stock synthetic, this is a bearish stock synthetic. So instead of buying calls, we buy puts, and instead of selling puts, okay, we sell short calls. So let's take that, and I'll show you that in our synthetic. So we added 30. So let's go out here to our 180 synthetic, and it looks like this. We added 30, right? So we bought the puts, buying a put, right? Buy is bearish. That's what this fund is all about, right? This come in handy way more than I ever thought. I just stuck it in here so I can always go back and show you guys. And this is the most simple way, because most people think calls are bullish and puts are bearish. Well, that's true if you're buying, right? But the minute you sell, you flip it. So you always have to know, are you buying or selling when it's a call or a put? All right, enough of that. So in our weeklies, within our May, it takes us, so I'm sorry, I was showing you the synthetic. Let me go back to the synthetic. Okay, so we put this on, right? And that netted 18, 19,000. So, or actually, no. So we bought the puts and we spent 51,000 and we sold short the calls, right? So that was a net reduction. So we went from making 44,000 to only making 25,000, right? So it was about 19,000. But that's fine as long as we're moving down from this 180, which we in fact are. So when you look down here, this is to be determined, but this is the current value. So we're now up 101,000, right? This is just like a piggy bank. As you do these transactions, you buy and sell, buy and sell. Well, sometimes this number is bigger, right? When this number is bigger, we put money in our pocket. When the put is bigger, since we're buying it, then we're spending more than we're selling something for, right? So in this case, we sold something for more than we spent. In this case, we sold something for less than we spent. So that's cutting into the money, so to speak, in our piggy bank. That still will get settled at settlement time, right? Because we'll make a lot more money. And what we're saying is these things are getting better. This is what we initially collected, but we have 101,000 paper profit, right? If we were to close those out. Okay, so I knew I wanted to get that. Was there anything else in May? If you scan over here, they did add 25,000. I put 2 transactions in here. That's why this number is repeated. So the 507,000, when you go out and you say at 25,000 shares, right? Just call it $20. There's 500,000. We gained 507,000. So that's roughly what happened there. People were buying, and then we're incrementing our treasuries. Each day they're giving us a little bit more of the interest on 1.2 and 1.201 and 93,000. So that's how the cash is flowing. Finally, we got some shares. We have a running total on our short call income of 52,830. Now, kind of interesting with this, and when I first saw this, it took me a while. I told you guys last time. So if you look, let's go to holdings, and I'll come back to the weekly. So what happens here? This whole category is different, right? Synthetic is the same, except you buy the put, sell the call. In the long stock, you buy the call, sell the put. But bottom line, you have a positive number typically and a negative number, and you always want your positive number to be bigger. In this case, our positive number is the put, right? Because, so we're setting on 101, but that's not radically different. What's radically different is this. We come here and here, and before we used to sell what's referred to as naked calls. We'd sell calls, hope that we didn't run past them, and if we didn't get up to them, we'd keep the premium from selling them. And if we ran way past them, we'd have to buy them back and lose money. So the concept is the same, right? Only we're doing it with puts. So we're selling puts, right? So we sold a 175, and we've captured 7.43% of the 49.9, right? Because we sold a 175 and we were up around 180 when we sold it. Now, at 171 to say 173 today, we went out 2 weeks. We didn't do that in the long stock. We would just go out 1 week. So we sold a 162.50. We sold 30 of them, right? And they closed at $2.10. But if you look at what the trade was, that was our second trade, right? So we sold them for $2.16, the 162.50, right? So we want it to go down, but we don't want it to go below 162. It's kind of like when you write the calls higher, you want to run up to them but not run past them. So we sell puts lower, we want to collect a premium. We just don't want it to get down in to where they put it to us. Well, we're never going to own that because we buy flex options. We just have to buy them back. So if we run below 162 by 524, then we got to spend cash, right? The settlement is never assignment of Tesla. We'll never own the Tesla shares. Neither does the bull fund, by the way, right? You do all this in options. All right, so that clears up a little bit more. So this, I'm using the same technique. This other one down here, it's strange because you don't do it. You would have these as your weekly sold, naked calls. This would be your synthetic. You would never have. So I'm now calling this weekly calls and long puts, right? Well, they're actually not even long puts. They're short puts because we're selling these short, so I need to fix that. They are weekly calls and short puts. All right, get the nomenclature correct here. But this going out 2 weeks is different, right? This part, we can see that we're capturing a little bit. So by dropping the 210, because it moved down closer in the day, we have, 6 cents on 30 contracts times 100. So we're 2.78% into capturing the 6,400. These are dinky. Look at the share counts, right? I honestly think when people get it, that they're going to get a lot more money in these funds. It's just, people don't like to bet on negative, but isn't it funny in news? If you tell all good stories on the news, nobody watches, but if you show a horrific car accident or a gory somebody being shot and killed or something, you get all kinds of people tuning into disasters and bad things. But here, people shy away from a bearish bet. I know Tesla's been super popular, but the reality is it may or may not do well near and medium term, which is my sort of belief. I think long term, I think Elon Musk is going to get it together. I just think, it's still overpriced in my opinion and could get down to 100 again. Now, I can be proven wrong, right? So I say to people, if you're not sure, buy a little of both, right? It somewhat protects you, right? I know some of you go out and buy short ETF funds, but this is an ETF fund you're familiar with that pays you money. So real fast, so what this protective call is, they added 30 today, by the way, right? So they went out here and they paid 57 cents to buy out to 719, which matches their synthetic, a 265 call. I explained this the other day. So what happens if Tesla just says, hey, we got autonomous driving, everybody can make money, you got robo-taxis, and the government's approved it, and the stock flies up to $350, then they actually will make a huge amount of money, right? If it ran to $350, they're going to make $90 on this 57 cents, right? Because it's going to blow by 265. So it's like a massive run up, they win. And it doesn't cost them much money. Look what, this is 3,600 that they spent. But I show it as a minus 161, right? Because they spent $9,405 to put on both of these, right? They put 30 today, but they'd already put 135, and it's only worth 3,600. So they're losing, 2/3 of it. But I just wanted you to know that, in fact, that's what it's for. It's really, and that's different. They don't do that on the bull side. Okay. So where are we at on closing things out for the day? So we closed at 2088, okay, and fair value says the assets divided by the number of shares is, so we're selling at a 4-cent premium. Look over here though, just in 3 days, okay, with Tesla dropping in a bearish fund, all of a sudden Our 180 synthetic, right, is having a 2.6 to 2,600 profit, 44,000 profit, 101,000 profit. Again, it's paper profit, but it's always positive if you want to take that off the board or roll it or do something. So let's look at payments and I'll let you guys go. So synthetic has produced, right, the transactions we've written, the 25,000, and the short call income is 42 of the 63 cents total, right? So if we were to pay out today, we could pay out 42 cents. Well, I think you guys are in it for the long run, but this could be a real performer. You know, a lot of it so much depends on which way Tesla goes. The bearish fund's going to win, the bull fund's going to win. We'll see, right? Own a little of both, and you should do all right, unless it breaks one way or the other. So what's the chart telling us? Okay, it's the only thing I haven't covered. So down here, I didn't update this, right? So it's showing around 174, 77, something like that. So we're closer, and it looks like we're treading right at the midpoint, maybe going a little below this channel, right? So as I said, this will be really interesting. Volume is back. Other than this, you know, after hours just fly up with the announcement, volume is nothing to speak of, right? So let's see what it does. All right, that's what I got here. Oh, so I wanted to say, we want Tesla going down, right? When I see this arrow, I go, oh, I'm so used to the bull funds that I want to see Crush go up and I want to see Tesla go up. No, I don't, right? In Crush, if I own it, I want Crush. The fund will go up when Tesla goes down, which means our synthetics are making more money. There'll be an occasion that we want it gently to go down so we don't run past our sold puts, just like in the other fund where we can get capped. The same thing could happen to us here. All right, guys, this is Bruce out. Again, I'm not a financial advisor. This is not financial advice. This is for fun and education only. Okay, see you guys.